Okay. Hi, everyone. Good morning, good afternoon, and good evening, depending on where you're watching my video from. This morning, I'm going to give you a proper analysis that can help your trading. I know we've been focusing on candlestick psychology, which is one thing I consider as one of um, the best style of trading. Okay, we've talked so much about this. Many of you know me for the fact that I focus on just candlesticks, considering other factors that are very necessary. But at the end of this video today, I'm going to show you something very, very interesting that can improve your trading, you know. So I want you to go along with me. And from now henceforth, I'm going to be giving you more updates, not just updates, more informative updates that can help you, that you can learn from, okay, that will give you an edge in this trading industry. Okay, so let's go. So today, I want to show you how I was able to analyze the market and without taking too much of trade and what the result is so that you can see how you do the same thing for yourself. Many people, I know there are different types of traders. There are swing traders, there are day traders, and there are scalpers. So whatever area of a trader you fit into, you can apply it. For me, I've adjusted my trading in such a way that I want to believe that less is more. Okay, because looking at candlesticks, I look into the fact that the candle has to close. And when it closes, that is when I start my analysis. And if I'm doing a daily candlesticks in my country, the candle with this broker closes around midnight, around 1 a.m. So I have to wait. So without taking much of your time, let's get into what I did here. I did this analysis here, and I'm going to take you through how I took this trade that is already running on risk to reward of 1 to 50. Risk to reward 1 to 50, you can see it here. This is risk to reward 1 to 50 that the market has reached and it has not stopped. So let's go. Let me take you through it. I'm not going to delete that. Let's just go first, a monthly candle. So from a monthly candle, what I am seeing, okay, because of the way this broker, there are certain areas of this that might not be easily seen. Okay, so but the overall trend from the monthly candle, because what I look for on a monthly, okay, what I look for on the monthly, I'm going to look for key levels. Okay, I'm looking for key levels in the market. I'm looking for key levels in the market. So after the key levels, number one, I'm looking for key levels. Okay. So what are the key levels on this monthly chart? For instance, the market is coming from here. Okay. So this is a key level. This is a key level. So this is another key level. The market got to this area. So the market got this way, went up, came down, went up again, came down. So for me, this is a key level. So if the market is going up, it's going to go to this area. So if the market is coming down, it comes to this area. Okay. So I've been able to have these two key levels here. So that is very, very important. So monthly, I'll repeat it. Monthly, look for key levels. Okay. Key levels. So when I come into weekly now, on a weekly, I will adjust my key levels and I will look into my trend. Okay, let's look at it. So on a weekly, I will adjust weekly. I will refine or adjust my key levels. Then at the same time, look at the overall trend. So the overall trend. because sometimes on a monthly, you might not be able to see it very well, but on a weekly, you can see it very, very clearly. So adjust, refine, and overall trend on a weekly. And as a matter of fact, my trade is based on a weekly candle. Before I take trade on daily candle, but like I said to you, daily candlesticks, I have to wait till when the candle closes, which is going to close around 1 a.m. So if I'm going to be taking trade every day, I have to be waking up around 1 a.m. to see and do analysis. And sometimes the entries can take me a long time before I do, because I do, direct market entry. I don't do pending orders. Okay. And I'm going to explain that to you. So on a weekly, we refine, we adjust, and we look out for our trend. So having done that, now, what am I refining? This is the area on a monthly. If the market is coming up, it's coming here. If the market is coming down, it's coming here. Okay. So this is monthly area. This is monthly area. Okay. Now, also, I refine it. Then I'll look at the trend. This is a trend. The trend is a downtrend. How do I know it's a downtrend? As a trader, you consider your structure, you consider your, swing highs and the swing lows, the lower highs and all of that. But when you look at this trade, what do you see? You see a ranging market. On a weekly, you see a ranging market. So the market is ranging from here to here. So it has touched here, touched here, touched here. So we're expecting the market to touch here again. It has touched here, touched here, touched here, touched here. So we're expecting the market to touch again. So here on a weekly, I know the trend. Also, one of the things you pay attention to on a weekly is patterns, candlestick patterns. Okay. So now let's summarize. Monthly, what do we look for on a monthly? Number one, key levels. You look for key levels on a monthly. Very, very important. Okay. Then number two, on a weekly, very important. It's actually the key, the weekly that I pay so much attention to. So on a weekly, you refine, adjust key levels from the monthly. Okay. Then secondly, on a weekly, your trend. What kind of a trend the market is giving. Then thirdly, on a weekly, can you see any pattern in the market? Can you see any pattern in the market? We don't trade the patterns, okay? But we use them for like a guide to support the things we are going to focus on. Okay. So having looked into that, now we have seen what we do monthly, weekly. Okay. Now, also on a weekly, you look at candlesticks. You look at candlesticks. What do I mean by you look at candlesticks? You look at the candlesticks of the market to predict the next candlesticks. So we are here right now. We are done with this. We are done with this. We are done with this. Patterns. What kind of a pattern do we see? We are seeing a kind of a ranging market here. So that is what we are seeing here. So we already know the direction of the market. Okay. So now, what else again do we do? We are looking at the candlesticks. So we go to our candlesticks now. Okay. So just go ahead with go along with me. So what kind of a candlestick we see? Remember, we already have this. We already have all of this. Okay, we already have this. Okay, so what we're now doing now is we know here, we know here, we know here. Okay, and we're expecting the market to come down. Why? Because the overall trend is down. So the market has touched. So we're now looking for candlestick, psychology on what to do next. So when you look at it, you see we have internal levels. You can see an internal level here. Okay, sorry about that. So we can see an internal level here based on candlestick. So the candlestick is going this way. There's a lot to talk about candlesticks anyway. So it was going this way, coming this way, went this way, coming this way. So based on candlesticks, if you're trying to analyze to know the next candlesticks, you have to consider the trend. You have to consider the momentum. So there's a lot. So based on this, let's just leave all of that. The market has gotten here. We have seen the good is very strong sellers. Okay, from a level, a key level, a strong seller from a key level. So, but after the strong seller, we can see at this area, there's a lot of reaction at this area. There's a lot of reaction here. There's a lot of reaction. You can see all those rejections. So if you look at it on a lower time frame, you can see very well. So we are going to get into a lower time frame. But before we get into a lower time frame, we want to know from that weekly, because it's weekly I am focusing on. I want to know from weekly that where is the direction of the market based on candlestick. So looking at the candlestick, so this strong candle here, which many people will call an engulfing candle, okay, this was the candle I was looking at, and I look at it as, okay, I know based on this level, there might be a kind of a little retracement. So I saw this green candle. So at the close of this candle, I knew that the next market is coming down to this area. Now, even if it's not going to get here, this is the first area I'm looking at, this area before here. Now, why am I looking at this area? I'm looking at this area because the market has given me pattern. So he might get to this area. Okay. So if he doesn't get there, I will see this area first before I think of this area. The way the candle behave at this area will make me know if the candle can get to this area. Okay. So let's go. So I already know that after this green candle, the next candle is going to be 7. So when I was analyzing, I saw this green candle going. So I was waiting for the green candle to finish. So let's see what happened on a daily candlesticks. So haven't seen that on a daily. Now look at it on a daily. Daily makes it clearer. Now on a daily, you can see that this level became very clear. Very, very clear. On a weekly, it wasn't very clear. So you can see that from a daily candlesticks, you now have a very clear trend. The trend we have analyzed on a weekly became clearer on a daily. So when you go back to how to use your top-down analysis, you see your monthly, you have your what? Key levels. Weekly, we pay so much attention, you refine, you adjust the key levels. Then weekly again, you look for your trend. Then weekly again, you look for your patterns. Weekly again, you look for your candles. Okay? So now when you come into daily, the daily gives you a clearer picture of the trend you have predicted weekly. And a daily also gives you an idea of the candlesticks. So on a daily that we are here, what are we seeing very clearly? What am I seeing very clearly? Look at it here. I'm seeing this level very clearly here. Okay, on a daily. Then at the same time, on a daily, look at what I'm seeing. Look at the structure. Look at the structure. The market goes this way. Okay, higher lows. Okay, higher highs. Then higher lows or equal lows there. Then the market also makes equal high. You can see that. Then the market makes swing low here. Then here, it's like making what? Either a triple top or like a kind of head and shoulder, like this area, and this area. So from this area now, I know the market is coming down here. From this area on a daily, okay? So it confirms with my weekly. Even though I have looked into my weekly, I've predicted that the market for the next week is going to go down. But moving to daily, it confirms it. So in my analysis, that is the way it goes. That is where top-down analysis of a candlestick goes. It gives you proper confirmation. I know when you are doing top-down analysis on using levels alone, you have several ways. But here, you're focusing on candles. So there's a confirmation here. Now, I haven't done that. I now know that I'm focusing on. So the market, the last candle for that week was this green candle here. And haven't noticed that this level, it's a very powerful level. And I also know as the candle was coming from here, it wasn't coming with a momentum. Now, what do I mean by momentum? If, for instance, I'm seeing a green candle, then this also a green candle, then the last candle is a green candle, I might be doubting this level, that this area might break because of momentum. But because there's already a weakness prior to that, this candle is a weakness. So I knew that this area is going to hold. That is from my candlestick class. Okay. So having seen that this area is going to hold. So the next thing I'm looking for now is my entry. From the daily, I'm looking for my entry. Before I will mark out what I call what is called an area of interest. Yes, but you see, I have refined it in such a way that it's now easier based on the entry strategy. Okay, so we now go straight to our entry candlesticks, which is our entry candle is 5 minutes. So we go to 5 minutes. Now let's put in where we enter the market. We enter. Okay, there's no need of doing that. So we enter the market. Let's go straight to 5 minutes. Yeah. So from our 5 minutes, let's see where we enter the market from. Then I will tell you why. Because previous classes, area of interest, amazing. We talk about that. But let's see. You also have an area of interest here, but a little bit well refined. Now, this is where we enter the market from. Now, how do we enter this market? This was where the daily candle closed, and this is our area of interest. So what are we looking for on a daily candlesticks? Very, very powerful. I'm going to do another video to explain the entry strategy. But looking at it in summary, because I don't want this video to be too long, okay? So we are looking at our swings. The market is going up, it's coming down. It made a double top here, okay? So it came down to this area, okay? The market came down to that area because the whole of this area is our area of interest. Okay, our area of interest. So the way the market behaves in this area is very important to us. Candlesticks. So we see the market making a swing high. It came down, made a swing low, made a double top. Okay, equal high. Then it came down again, trying to break this area a little bit. Then it pulls back again. The third time. Haven't noticed that this is an area of interest. So the pattern that this thing gives to me with candlestick is what gives me the boldness, the confidence to look for a trade here. After the first touch, the second touch, the third touch, I knew the market is coming down. I knew the market was coming down. So what I did was that I now look for an entry candle. Now, an entry candle is another thing I'm going to do a kind of a video as we move on with this class, because I think I want to do a kind of a comprehensive from being a novice or a newbie in trading to being a professional trader in candlesticks. So what we did was that we look at it. Our entry candle is when the market touched it the third time. Take note, third time. This is double bottom. This is the third touch. Third touch. We'll talk about why I'm very emphasizing on the third touch. Now, I look for entry candle. There's something we call entry candle. Now, this is where we have an advantage, or this is where in just candlesticks we have an advantage. Our entry candle, if the market is going to go in your predicted direction, you see the entry candle and the previous candle, the way it forms will help you to know where to put your SL, your stop loss. And that is why my stop losses are always very, very small, and it gives me a high risk to reward. Now, what did I do? My entry candle, according to candlestick, will be around here. So first, there's a rejection from here, from this level, area of interest. Second, I didn't enter the market. Second, there's another candlestick that comes in here with a rejection. It made a new high. But these are candles at this area. All of that is in our candlestick psychology class. Then thirdly, I'm now seeing this red candle. So this red candle has given me a new low. So that is now my entry candle. Now, in reality, in candlestick rules, the next candle should not go beyond this. Let me show you something. The next candle should not go above this entry candle. So, but I decided to shift it a little bit above here, okay? But in candlestick, if the market is going to go, the next candle will not go above this. So the stop loss is supposed to be above there. But I decided to add it a little bit up here just to give allowance. So that's how we enter the market. So the moment we enter the market here, the market entered, it went up a little bit, it came down, went up, came down. And of course, if you look at where we are right now, what do we have? So let's see where we are overall trade now. Let's see our overall trade. Let's go to 1 hour. So our overall trade now, what do we have? We already made risk to reward. This is it here. 1:50. Risk to reward 1:50. Okay. Now, there is also a strategic way to take profit. Now, should I get out of this area? Now, if you look at the market entered from here. It first of all made risk to reward 1:15. It pulls back to 1:5. Okay. Now, one of the things we do now, I think we'll talk about that later. Let's leave all of that. We can put everything into one video. But right now, we have been able to achieve risk to reward 1:50 in how many days? Let's see it on a daily candlesticks. Let's go to daily candlesticks and see how many days we are able to achieve that. Let's see. Okay, so how many days do we achieve 1:50? This is day 1, this is day 2, this is 1, this is 2, and we are on day 3. We are targeting here first. So we are on day 3 right now, and we have made 1:50. A certain profit has been taken out of the market or anyway. Right now, we are risk to reward 1:50. The last video I did, I did one on a Bitcoin and I did one on a volatility 75x. Bitcoin gave us, our first entry gave us 1:60 or 1:57. Then the second entry gave us 1:30. The second entry. Now here, I didn't bother to do second entry. I just allow it to move. But certain profit has been taken out of the market according to the strategy. Okay, so these are the things that we are going to be doing. But one thing I'm promising you right now is that I'm going to be making sure that every week, the analysis, which we've been doing before on our VIP class, we do our analysis on Sunday through Zoom. So we will continue to do that. And even if I'm not able to do that, I will make sure that the candlesticks that we have analyzed for the week, I will post it. Then I will expect you to, based on the entry strategy that I have taught, I will expect you to be able to use them. But I'm going to release another updated entry strategy for 2026. That will make it easier, because sometimes you enter the market takes you out first and before you continue to go. So we have had a very powerful updated strategy that will be updated and be posted on the VIP group. So ladies and gentlemen, thank you very much for watching the video. And this is what we do with Candlestick. So if you now go back again and you look at it, you look at your trade on a weekly, you see that you can see on a weekly right now. You see on a weekly, you see what we are talking about. We are targeting this area. This is the area we are targeting. Then that's the first area. Then this is the second area. So you can imagine if we are here and we have made reach to the 1 to 50, by the time we get to this area, we are going to be approaching something like 80. And by the time we get here, we are going to be looking at reach to reward 1 to either, if we get there, because this is weekly. Okay, this is weekly. So we can have 1 to 150, because this is less than half, almost 100 and 200, reach to reward 1 to 200. So this is what candlestick trading does. It gives you peace. It's only one trade and it's been running for 3 days. So you just go ahead. The first day a profit was taken, which is, I think, let me just say, the first day 1 to 10 was taken out of the market. And of course, the moment you have made 1 to 10 from any trade, it's an amazing one. Now you now allow the rest to run. Imagine what is going to happen to you or happen to your account. So ladies and gentlemen, thank you for listening, and expect more updates, expect more videos, and expect more signals. Thank you, and God bless you.